Thank you for joining me. I'm Alex, and I want to talk about Google today. And it's not because Google should be largely unaffected by the current situation, but they're affected in more of a minor way. So, we're talking about Alphabet, but basically it's just Google. And what Google does is mainly they have a search engine, they have YouTube, they have a whole bunch of other things. And the main source of revenue for Google is advertising. And advertising is affected by the current situation because a lot of companies don't have the revenue currently to pay for advertising. And a lot of businesses are actually closing down or, closing all their stores until the situation is resolved. And so obviously they're not spending money on advertising when the stores are closed anyway. So Google slightly affected, not actually that much, and I don't think that it really factors in that much with the company, and I really don't think that they're going to be affected long term by the current situation. So obviously long term this is of no consequence to Google, and so figured it's time to have a look and see if we have a bargain right now. So current price is $1,097.88, which gives the market cap of $753 billion. One of the top 3 companies in the world, and I'm not sure if that's at all justified, but I really don't think that they're going to go much lower than this. Dividend is 0. I don't expect that to change anytime soon. Maybe if they keep making too much money and aren't sure what to do with it, they will start paying a dividend, but definitely not counting on it. Revenue $162 billion, earnings $34 billion, both up significantly. PE of 22, forward PE of 20. It is still slightly over 20 on the forward PE, and so for people like Benjamin Graham, that would not be a buy right now. I really don't think that they're going to go much lower than this either. So if you're a purely value-based investor, then the hard limit will prevent you here. Total assets $276 billion, total liabilities $74 billion, which gives them total stockholders' equity of $201 billion, which is up very significantly from the previous year. And obviously, balance sheet looks amazing. Big technology company, fairly low startup cost. So obviously, the balance sheet can grow in the right direction without too much effort. So overall, I would say that since pretty much all of their money comes through revenue, they're going to lose a significant portion of their revenue over the next couple months. And I do expect that to go back up. I'm not sure if it's going to go back up to the current levels or to the previous levels anytime soon. Could take a year, could take 2 years. Really don't think that it's going to be a problem for them because the earnings are quite significant. Their product lineup is amazing. Obviously, YouTube right now is a good thing for a lot of people. And so I would expect YouTube especially to grow right now fairly significantly. So overall, I would say that obviously for a dividend investor, you're just going to be out. For a growth investor, I don't think that the growth here of under 20% is really that good for a growth investor, and I don't expect Google to be like increasing 10 times in price over the next 10 years. So for a growth investor, I don't think this is the stock for you either. For a value investor, things get interesting. If you don't have that hard of a limit on the PE, I think this is going to be a very interesting company to look into. Revenue is growing, earnings are growing, dividend is not there. The PE is just over 20, which I don't think is that much of a problem. The balance sheet looks amazing. So basically everything working in your favor here. So I would say that people should be looking into the stock, and obviously do your own research, look at the risk factors, of which I don't think there are too many right now. Facebook getting into advertising, Amazon getting into advertising, I don't think either of them are that much of a threat though. So overall, I would say that things are going to continue quite steadily for Google, probably. So I think that this is probably a buy for a person like me who likes safe companies with growth potential, with nice balance sheets and PE ratings, so PE ratios. So that's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.